Mr. Jaipuria, in terms of sectors, if you can elaborate, what is your ब्रेन थिंकिंग, कहाँ पैसे डाले जाएं जो नए आ रहे हैं, क्या बात की जाए कंपनी से. आई एम श्योर डिस्पाइट डिस्फिल Q1 you still have a lot of winners coming out in these quarterly earnings that we just bade goodbye to.
Yeah, so it's like in times like these, see, liquidity is easy, interest rates are down. So to that extent, what this is providing us is room is, you can do more work and buy stocks where you see growth being mispriced by the market. So for us, there are a lot of companies where we think growth will come back. For example, if we look at our whole universe or look at our portfolio, we're expecting earnings growth to be 20% plus for this fiscal year. And they trade at a valuation of 16 times. So
Okay.
what we try to do is find companies which are growing faster than the market and who are trading at valuations which are lower than the market on a very overall basis in our portfolio. So there are pockets to look at, and it probably becomes more interesting for people like us because, when this growth is aplenty and everything's running up in momentum, we somewhere tend to lag because we are like a bit of contrarian, I would say. Our whole philosophy is the three U's, where we buy undervalued stocks which are probably underowned, underperforming. And so, we tend to not go in line with the momentum, but against momentum. So where we've been nibbling is, one area we've been looking at is like the cement. And that was before this GST news came, it's not linked to GST. But two, three reasons. One is, as the monsoons get over, demand scenario is quite strong. Second is the whole industry's got consolidated quite a bit. So what we will see in the industry is basically, because of the consolidation, pricing power will pick up. If you see the last 18 months, pricing was very weak in cement because, there are a couple of big players trying to gobble up some of the smaller players. But now that the consolidation has reached a stage where a lot of the smaller players have been, bought out, I think pricing power will come back to the industry. So that is one area where, we are quite positive on and we think things will improve. The other has been banks for us. We like the banks. They have NIM pressure just now. They have like, earnings are under pressure. But 2 quarters later, just like, NIMs came down because, the loans were getting repriced down and the deposits were not getting repriced. 2 quarters later, you'll have the lead lag effect of it, where, the loans have already got repriced and then the deposits start to get repriced down. So NIMs will pick up. So for us, it is, at sensible valuations, we buy things like this. Then there are some things which, I call them auto ancillaries and, real estate ancillaries, which are basically ancillaries to consumer demand. So, we have some companies which are into auto ancillaries, which are doing very well. We have some, companies which are ancillaries to the real estate space. For example, cables and tiles and wires and companies like that. And those are sectors which we find very interesting and where growth is there.
If you like the video, do like, comment, share and subscribe.